Hi everyone, welcome back to my YouTube channel. I hope you all are doing good. My name is CS Harshdeep Singh Narula and today we are going to discuss about 5 mistakes to avoid while incorporating a company in India. Means while incorporating a private limited company or a public limited company in India. So we will discuss 5 major points which you should avoid and which you should take care of in the very beginning itself. The point number 1 is how to choose and what to choose. What type of company is best suitable for you? We'll discuss that. A private limited company or a public limited company. So I'll tell you that in a public limited company, there are few extra compliances. I'll read as follows and I'll explain it as well. The very first extra compliance is demat of shares. In a public limited company there is a compulsory concept of demat of shares, and in a private limited company the concept only comes when you are other than a small company. That means when you have a turnover of more than 40 crores and a paid up share capital of more than 4 crore, then only you have to get a demat, and that is in very rare cases only. So if you are incorporating a private limited company, then it's good. If you are ready for the public limited company and ready to bear the cost of dematerialization of shares and extra cost, which I'll explain now, then incorporate a public limited company. Moving further, you have to appoint a RTA, that is Registrar and Share Transfer Agent. So RTA appointment is compulsory in public company, and RTA is kind of a middleman between you and the depository. So there are two depositories in India. One is NSDL and second is CDSL. So I'll explain you further. For the RTA, you have to pay the annual cost. Annual cost could be 5,000, 10,000 plus GST, etc. And for the NSDL and CDSL, you have to pay a huge cost, and along with that, you have to pay them the security as well. Moving further, you have to get into the hassle of getting demat of shares of all the subscribers. First you have to appoint RTA, then you have to appoint depository, that is NSDL or CDSL. You have to pay huge cost to them, and then you have to get demat account open of all the shareholders with a bank or with a demat agent. Moving further, so you have to manage the register on very regular basis, because you don't know, you have to manage it proactively, because you don't know your shareholders are selling and buying the shares, and you have to manage it proactively. So you have to hire one more person for that as well. So now there is a concept of past 6 form, that is half yearly return for the shares. So the thing is, the preparation and the certification cost of a company secretary is also there, and the government fees is also there. So this is an extra cost as well. Further, you have to bring 7 members and 3 directors. Finding those reliable 7 members and 3 directors is also very tough. And in the case of a private limited company, you just have to get 2 people. Those 2 people can be director and shareholder as well. And also you do not have to open a demat account. You do not have to engage RTA, NSDL, depository, or you do not have to file past 6 half yearly return in the case of private limited company. So the thing is, when people start their business journey, they get very excited with the name limited. ABC Limited, that is a public company, and they think that they can manage it, and most of my clients thought this. However, private limited is best suitable for you if you are ready to expand, but not at that level which the public limited company expands. Moving further, point number 2, choosing the correct authorized share capital. So this is the major point for which I made this video, for which I am making this video. Initially, you should always choose 15 lakh as authorized share capital. Whenever you Google that I want to incorporate a company, or whenever you talk to your consultant, or whenever you talk to anyone, your peers, they suggest you to get your company incorporated with authorized share capital of rupees 1 lakh only. So don't make this mistake ever. Always choose with the 15 lakh authorized share capital in the very beginning only. So I'll tell you why. Because in the beginning you have this option, and later you have to spend so huge cost to increase the share capital, and I'll explain it with the 3 examples later. So in the beginning, it will, if you are going to incorporate with 15 lakh as a authorized share capital, then the thing is, you will get a scope and you will also have an option to increase your paid up share capital, and you will save the time and hassle and professional cost as well in the near future. So let's take an example that if you incorporated a company in certain regions, for example Punjab, Delhi, Haryana or Uttar Pradesh, and if you did in 1 lakh rupees, now you want to change into 15 lakh rupees. So what would be the extra compliances and what would be the extra cost? We'll begin with the example of Punjab. So suppose you incorporated a company in Punjab, say with rupees 1 lakh as authorized share capital, and now today you want to change the authorized share capital to 15 lakh rupees. So the thing is, the fee now today would be charged to change from 1 lakh to 15 lakh authorized share capital would be, government fees would be 12,100 rupees. So the thing is, what if you already incorporated in the beginning with 15 lakh share capital? Then there would be, what would be the fee? Then the fee would be 15,025 rupees. I'll take the example of we are taking the example of Punjab. You incorporated in Punjab with 1 lakh authorized share capital, and at that time you paid rupees 10,025 rupees. Now you want to change it to the 15 lakh. Now you are paying extra 12,100 rupees. So if you got at that time and got it done with the 15 lakh rupees authorized share capital, then you would have only paid an extra amount of 5,000 rupees at that time. And now if you are going to change, so you have to pay an extra 7,100 plus a professional cost of 5,000 and a government fee of 600 as well. So now you are paying an extra cost of rupees 32,700 if you are changing a authorized share capital in a company of Punjab from rupees 1 lakh to 15 lakh rupees. And the cost is not just of the government, it's of professional as well, that is 32,700 rupees. Let's say we take an example too. You incorporated a company in Haryana with 1 lakh authorized share capital and only paid rupees 135. That is a stamp duty of, if you incorporate in Haryana, the stamp duty for 1 lakh authorized share capital is 135. And now you want to change it to the 15 lakh rupees. So changing from 1 lakh to 15 lakh, the government fees is rupees 10,000. So what if you already incorporated a company in Haryana with 15 lakh rupees as authorized share capital, that instead of 135 rupees you just had to pay 195 rupees, that is you just had to pay rupees 60 extra, rupees 60, just rupees 60. Now if you are changing in Haryana from 1 lakh to 15 lakh, now you are paying 9,940 rupees extra as a government fee, 25,000 as a professional fees plus 600 as your government fees for form filing. So now you are paying a sum of 35,540 rupees extra if you are changing from rupees 1 lakh to authorized share capital to 15 lakh authorized share capital in Haryana. Now let's take example 3. If you incorporated a company in UP for 1 lakh rupees, then you had paid rupees 1,010 rupees, and if now you want to change the authorized share capital to 15 lakh rupees, now you have to pay 10,000 rupees extra as a government fee. So what if you already incorporate a company in Uttar Pradesh for 15 lakh rupees? You know what? For 1 lakh authorized share capital and for 15 lakh authorized share capital, the government fee, the stamp duty fee in UP was same at the time of incorporation. That is, even if you incorporate a company in Uttar Pradesh with 15 lakh authorized share capital, you just had to pay rupees 1,010. Now you have to pay extra sum of 8,990 plus 25,000 rupees government plus 600 form filing plus 25,000 professional. Now you are paying a total sum of 34,590 if you are changing a company authorized share capital of a company from 1 lakh to 15 lakh in Uttar Pradesh. Point number 3. You do not plan the other registration cost. You just think company incorporation. That's not the thing. You have to prepare the budget of your other registrations as well, like shop establishment registration, trade license, trademark, food license if it's applied on you, import export code if you want to import or export, startup India registration, ISO registration, etc. So plan accordingly. That is just this means that you just don't have to plan for company incorporation, you just have to plan for other registrations as well to secure your business at very beginning, which nobody tells you. So the fourth point is now not choosing a right consultant. Always choose a right consultant. The right consultant can save a lot of money to you. For example, a right consultant can guide you to get 15 lakh authorized share capital. A right consultant can guide you to get early trademark registration. The right consultant, as per me, without disrespecting any other profession, would be practicing company secretary, because a practicing company secretary can, a CS can give you all of these services with its core knowledge in a single firm. Moving further, the last point is not creating MOU. When you're starting your business journey with friends, family, or your partners, always create a memorandum of understanding, so that the companies bind with the memorandum of understanding as well as articles of associations. That's all. Thank you very much. If you want to know anything else, please feel free to comment down or feel free to WhatsApp me. My number is mentioned in the description, and also you can email me on my email address. Thank you very much.